Question is, how many people have 100K just lying around that they're willing to lose, that they're willing to blow on trading? That's not happening.
It's not feasible. Fortunately, I missed it because I was stuffing around trying to look at the S&P, and then you know how it goes. It's like, one goes to the next, and that's unfortunately how it
Did you were you on the charts when that trade presented itself? So you saw the trade and you didn't take it, and you went to look around somewhere else, shop around, and then it ended up running.
Correct. Yep. And then I just kept
I mean, you hesitate, you masturbate, bro,
Yeah. Yep. I was clowning around, bro. I missed my trade, and then I go and shop around, and as you said.
That's why we started Hydra in the first place, because I saw this industry and I was like, shit, this is actually one of those few scenarios in trading in the industry where there's a real win-win opportunity for traders as well as company owners if the firm is run the right way.
Correct. If the firm is run correctly, and I agree, bro. I've actually tweeted it the other day. I think prop firms are the best thing to happen to the retail trading space. That's why I vouch for great firms such as, Hydra.
What's going on, guys? Welcome back to the Hydra Funding Podcast, episode 2. We got a friendly, familiar face here with James. Very excited to continue our conversation from the previous podcast and get into some trading talk, some live talk. As you guys know, maybe if you missed the previous episode, this is a podcast where we kind of want to talk about all things related to us as human beings, as men, not particularly just trading. Obviously, it's a big part of our lives, but we want to get into some other things, some other aspects of life as well. And I think a cool thing about last episode, we ended up talking about, my favorite part actually from last episode was when we started talking about the similarities between golf and trading. And it's definitely, they've definitely got some, there's definitely some crossover between kind of the lessons that you learn playing golf as well as in the game of trading. And that's where I see it. They're both very interesting, very fun games. And I love both. I'm dealing with a bit of a knee injury at the moment, unfortunately. I have a sprained MCL, ACL, and patellar tendon. Not from doing anything cool. I was an idiot. I slipped and fell next to my pool, basically half into my pool, and I bent my knee completely the wrong way. And for the last 2 weeks, I've been kind of hobbling around, and just not been really able to do much actually. But it is what it is. Life happens. Injuries are the worst.
Getting old, you are.
I'm getting so old I can't even walk next to my pool without falling in, but it is what it is. But it's been, other than the injury, it's been a pretty solid 2 weeks for me, like trading wise. This month is shaping up to be real good, from a results perspective, pretty good. But I'm more so happy with how I've executed. And it feels really good when you execute really, really well to be rewarded with the results, because we know that in trading, it doesn't always pan out that way, right? You can be perfect on your risk management, perfect with your entries, and it's just the setups don't pan out, right? So sometimes it's just you get a distribution of trades that are losers. But it feels really nice when, my execution has really been perfect. I can't complain. Like every single trade I've taken has been executed, planned, there's been, completely based on the system. And, I'm just happy with how I've traded this month. And the first half of the month was kind of break even, but then I picked up a few wins the last week or two. And with my risk reward, couple wins here and there, it's going to turn things around massively. So September's been overall a very, very good month. How have things been for yourself trading wise, James?
Yeah, August was pretty good for me. September started off a lot more slower. Got myself in some drawdowns on some funded accounts as well as some challenge accounts, which are going to happen. We spoke about that on episode 1. So just kind of going to tick along one day at a time, right? And I do put some accounts on, some accounts off at some stages too. So that's something that I do to help mitigate risk. So, but yeah, this month I slightly down a little bit. I think I had some DAX trades this morning, so that I think should put me up slightly up on the month. Not
Yeah,
big.
DAX is big pumping. DAX has been big pumping. Out of all the indices, actually, DAX has been the strongest performing, I would say, as far as
London
the
sessions
overall
have been
picture.
nice, bro, on the DAX.
Yeah.
So that should put me just slightly up, whopping $500 or so for the month. So, so we'll see what happens the rest of the month. But those are we spoke about this on episode 1. Not every single month is going to be, absolutely killer month. So you can execute well and still be down. So, but yeah, other than that, no, all good my side. I think, I did have a little bit of a break in the beginning of September too. So maybe that threw me off my game a little bit. But yeah, coming back to the desk, finding some rhythm again, and then looking to we're obviously ending Q3 now, looking to start Q4 strong and hopefully get some Hydra accounts crossed by the end of the year. So got some good goals in plan for the rest of the year.
Yeah, so James here is on a couple of Hydra challenges, and I'm on my own Hydra challenge as well. I'm doing my own 200K challenge. For those of you wondering, yes, like I still have to follow all the same rules. Like I'm a trader first before I ever started Hydra, and the way we have the company set up is, everyone, regardless of whether you're affiliated with the company, regardless of whether you work for the company, it doesn't matter. If you want to be involved in the trading side, that's a completely separate thing. And like for me, like if I'm trading, for myself even to get funded, I have to pass the same challenge that everybody else has to pass. There's no shortcuts, loopholes, or anything like that. And yeah, I want to pass it myself because we've talked about a lot about kind of like benefits of trading, with external capital as opposed to trading with your own, and that's a benefit for me as well, right? Like, and that's one of the benefits of running a non 100% B book firm, right? Like we mitigate risk. We're able to hedge out trades. So, if I have a funded account and I'm performing well, the same thing that our risk team is going to do for anyone that's performing well, the trades are going to get hedged out and there's going to be real money made on the table. So it's not just trader profits are paying for, trader profits are being paid by sign up fees, right? That's one of the things that, in the first year, we really had to work hard to get right in the company. And yeah, we're at a very solid place. I'm very happy with that. And so now I'm doing my own challenge. I know, legally and everything, like just from a company perspective, everything is clean and in the clear. So yeah, working on this challenge. Phase 1 was super easy. I passed phase 1 in like 3 weeks on a 200K accounts. And then I've been trading phase 2 for the last 2.5 months. So that's how trading goes, guys. That's how it goes, like I've been basically the last 2.5 months have basically been a wash because I started off with a really like my worst month of the year was the start of phase 2. And then I've had, good months, bad months, and, made some money since then. So just about back to even from when I started phase 2. So it's been a little bit of a grind, but, that's kind of what trading is, right? It's never going to be a straight up journey.
Yeah, 100%. 100%, bro. I think that, I actually I had a losing day yesterday. I shared that across, I was down, I think it was $6,000 across funding accounts and personal and some challenge accounts yesterday. And I shared it online and I think I got a notification here now saying, thanks for sharing and being honest. Not a lot of people in this space are honest about it. Everyone wins 100% of the time. And I was like, yeah, not everyone does. So I think it's just about being transparent. Like, you
sure you didn't flip a $500 account into $100,000 last month? You didn't do that?
Yeah, no. Well, with my whopping $500 profit that I've made across all my accounts this month, I think I can go, give it a go. But yeah, no, it's you got to be more, there's going to be winning days, there's going to be losing days. I mean, I speak to one of the guys here. He lives just down the road from me, and he's a really, really big trader. I think he's taken some Hydra challenges as well. Last time we spoke, but anyway, he often. The reason I like him so much is in terms of, and he's been trading for like 16 years, and I was the one that got him onto prop firms like 2 years ago. He was trading for an in-house prop firm in South Africa, And he says to me straight up, dude, yeah, I didn't follow my rules today. I over-risked. I was an idiot. Like straight up. There's no like, and he doesn't only speak to me when like it's going good. He speaks to me when it's good and bad. I think that's also the sign of like, when you know yourself as a trader, you can say, listen, I messed up today. I've got to bring it back here. I've got to get back in the zone and I've got to lock in, because we're always going to, as discretionary traders, we can always mess it up. I know you were speaking. I've got some questions here. Obviously, we got our 3 questions, right?
But right, we did have that. We did have the Q&A last episode. You guys should check it out. We'll have the link below somewhere. We had this little Q&A with each other, and it was a lot of fun. So if you haven't checked it out, like, take 100%. A look. Episode 1 was fun.
So I've got a couple of questions here, but I know this is what we're kind of speaking about, and about risk and that type of stuff. You were mentioning before we started the recording about swing trading. Why do you think you want to go into, or you liking swing trading at the moment? What are your thoughts on that? Yeah, why do you like the idea of it?
So, my experience with swing trading was previously mostly limited to crypto. I was swing trading, only swing trading crypto. And with Forex side, I've just only day traded, right? And as my schedule's been, picking up more and more things to do with, running Hydra, with, just like take life in general, with also, managing, not just the company, but also the employees. As we've kind of grown, had more employees, like things just started to pick up on my schedule versus, before, where I pretty much had the whole day to kind of manage and trade, right? Like swing trading, I think one of the biggest benefits is you don't have to park yourself on the charts at any given time, or you don't have to like, oh, for the next 3 hours, I'm going to be on the charts, or 2 hours or whatever. It's kind of you check throughout the day, you take a look, you set your alerts. So it's more of I feel like it's a little bit more of a reactive game. And I would say I've been fully like swing trading. So I basically have deployed a very similar strategy that I used to use on crypto, slightly tweaked, because I was trading more breakouts for crypto, but in Forex, I'm trading a little bit more pullbacks. And, I took a very similar system, tweaked a few things, went and back tested it, for about, 150 entries or so, and then was very happy with what I saw on the results across different pairs. So then took it live, into Forex trading. I actually have been trading this on my Hydra account, and I've loved having just this openness of day where I don't have to be like, yo, at this time I have to be sitting in front of the computer. Even if nothing's happening, I have to like sit there and just like block out this time. With swing trading, I feel like I can be a lot more productive with my time, right? Like if I have 5-10 minutes to scout the charts, that's really all it takes. And I'm watching a lot of pairs. I'm watching, I don't even know, like 30, 40 pairs, right? Like I'm watching currencies, indices, metals.
Across all of them. I'm with you. Yeah.
Yeah. So, I'm watching a lot of pairs, right? But because things move slow, I'm entering and trading the 1 hour time frame. You can check a couple times a day. Generally I'm checking in maybe 3 times a day, like a good scan. And I've developed a system where maybe I can share the screen and just like, talk about kind of how I'm managing. This is something that I've started doing as well. I've come up with a little bit of a management system. Gotta open up and show with the trade that's running in profits right now, of course. But I have this little system here where on the right side, if you can see, I have things that are marked in green. So anything that's green there is a setup currently. So this is like green means like green light. Like I can trade this. I didn't catch this. I set this to green when, the pullback was kind of in here on AU. So this actually should be going back to orange now, or yellow, whatever that is. Yellow for me just means, there's the market's trending. It's a market that I want to pay attention to, but maybe not necessarily there's a setup right now, right? Like, so for Euro GBP, there was a setup here that I was watching. I did not catch this trade. I did catch, I am short Euro AUD and Euro NZD at the moment. I have these 2 trades. I did not take the one on Euro GBP because it just kind of dumped off the highs and I wasn't there. So, if you take a look at kind of like Euro, these are markets that are potentially trending. I don't actually like how this looks right now, so I'm just going to take it off. And then GU looks decent. So yeah, I have this system, and then the purple ones are the ones that I'm currently in a trade on. France is actually no more. Nice. This is gone. This is orange. I caught this rip. I think I was telling James before the podcast. Yeah, I got long France yesterday after I saw EMA starting to flip bullish here, pulling back into the 50. Just took a long, held it for a day, and today all my TPs were hit. So this was a nice trade. All the indices are ripping right now. Massive pumps on across pretty much all of the indices. NAS is going on a tear. I think it could be NAS's turn to go on a bit of a run. I like how gold looks. Gold's very, very bullish, but it's not really provided me too many opportunities to long this entire stretch up. It's never really pulled back. Silver also, there was some nice opportunities to long over here, but I did not catch that one, I'll be honest. And I took a loss also on Bitcoin yesterday, I believe. Yesterday night I took a long on Bitcoin. Got stopped out here. It's bouncing back. So that's kind of how trading. That's kind of how trading goes. But yeah, I like this management system that I have. I like that I'll come in and, anything that I've highlighted, if I don't have much time, I am only looking at the highlights. So I'm looking at anything that I've marked out, in yellow, in green, because those are the ones that I know potentially could set up. Anything that I haven't marked is probably uninteresting. But if I have more time, I'll go through the full list. But if I don't have time and I'm just like, I got like 10 minutes, I'm just taking a quick scan through the ones I've marked out. And that's really it. It doesn't take more than 5 minutes to scan through the pairs that I've marked out that are as potential opportunities. So it's very, very chill, very laid back. And I also find that another benefit of swing trading that I really like is you don't deal with slippage at all. There is no slippage. Or even if there is, it doesn't matter, right? Like it doesn't matter if your trade gets slipped, I don't know, 0.5 pips. It's actually usually very rare you get slipped because you're dealing with much smaller volume, right? Like if you're, used to slinging 20 lots, 25 lots on very small time frames, trading 2-minute, 5-minute entries, on the hourly, I'm used to trading 1 lot, 2 lots, and you're not going to get slipped. Even if you market enter, you're not going to affect the price really on like 1-2 lot sizing. And this 1-2 lot sizing I'm using is basically on a 200K account. So, on very large accounts, that's what I find. Like the larger the account, actually, the more suitable it is for swing trading, because if you're trying to risk, 0.5% a trade or even 1% a trade on a low time frame, you're going to be buying a lot of lots and you're going to get slipped because you're going to eat up the entire order book, right? So, I personally, have really enjoyed switching over to swing trading. The only thing I really had to get over was holding positions overnight, which was hard for me at the moment because, it's just like, I have a position open. You're kind of wondering about it. But once you get used to how slow things move, sometimes I forget that I'm even in a position. By the time evening comes, if I don't feel like being on the charts, I don't really remember I'm in something. And the way that I trade is very set and forget. Once I'm in a position, everything is automated, right? When the stop gets moved to break even, it's automated. I do everything through my EA on MetaTrader. All the TPs are automated. I usually have 4 different take profits. Everything is automated, so I don't have to do anything. Once I enter a trade, all the work is done there, and it's over. Like I'm on to the next. So I think overall, like it took a bit of getting used to, but I'm really enjoying it now. And I think that's the way forward for me is like swing trading. Plus the benefit of like being able to scale an account much more. You're going to be able to trade a much larger account much easier on higher time frames than you are on the 5-minute, 2 minutes, because you'll have to deal with stuff like slippage. Spread matters a lot more, right? Like on the 1 hour, there basically is no spread ever.
We're also paying more commissions if you're taking more trades as well.
Correct. So you would pay more commissions on the lower time frames, and on the higher time frames, you'll pay swap. But in my experience, the swap fees have been lower than commissions from trading 2-minute, 5-minute time frames. Commissions, like swap, is generally lower because you just like it's commissions tend to be high, especially when you're slinging large lots. So overall I find it to be a little bit more consistent. I like that about the higher time frames, the consistency, and just it feels a lot easier, should I say, to trade and manage. And then the final thing that I've really noticed is psychology-wise, I've had my best month of execution since I started trading the 1 hour. Just as far as like risk management, just like executing perfectly to the system, not deviating from, the trading plan and stuff like this. and just as an overall sense of emotional balance, being very calm. I think maybe because things take so long to play out, like it's hours. Sometimes I'm holding trades up to a week, right? And you just don't, there's not this like video game type excitement where you're just watching something in the next 5 minutes up and down. And that's like can be kind of a roller coaster sometimes, right?
Of course.
When things are playing out over a very long time frame, you're kind of just like, you get bored. Like you can't sit there and watch a 1 hour chart move, bro. Like it's not very fun, you know? So yeah, I feel like psychologically, emotionally, there's a lot more consistency, and that's probably directly correlated to my execution over the past month. And I've been extremely happy with my execution. Like it's close to perfect as I've ever been as trading Forex. No stupid, silly like mistakes. No like tilting after like, oh, I just got slipped, like huge. Like now I have to change all my RRs and all this stuff. I'm like, how do I manage this? None of that. So yeah, been really, really happy, and I think I'm sticking to higher time frames for now. Like I don't want to move. I don't want to deal with like low time frames anymore, and I just feel a lot more free doing this. And back to what you were saying as well, you were on a trip taking a break to see your parents, right? Like a while ago. I feel like with a certain travel schedule that swing trading is a lot more suitable for that as well, because you can execute on your phone easily. It doesn't take that much time. Like it's probably also more suited if you're traveling. You're going to be able to manage things a lot easier and stay on top of it. Yeah, so that's my experience.
Yeah, also maybe because also when you were day trading quite a few pairs, right? Or for me, I actually something when I was still trading currencies, I chopped down completely and helped my trading a lot. And then when I moved over to the indexes, I'm only really trading maybe the DAX in the London session and the NASDAQ in the New York session. That's kind of my main focus. So I think when you're day trading, you want to be kind of zoned in and locked in. When you swing trading, you can watch a lot more assets because obviously you can look at it like maybe 1 hour a day,
Yeah, for sure.
Yeah.
Time wise, I think I'm loving it. Honestly, like I'm really, really enjoying, taking swing trades and just.
I think the real reason why you want to swing trades so you can actually focus on another type of swing is your golf swing. That's why you want to swing trade.
Yeah, no doubt about that. No, I mean the amount of time that I've put into golf in the last year, that's definitely something. But yeah, for those of you guys that have maybe are a little bit in between, right? Maybe you're thinking, oh, should I be a swing trader? Should I be a day trader? These are the things that you take into account and consideration, right? Like I've just said a lot of benefits of swing trading. But the benefits of like day trading is like you get a lot more opportunities, right? If you're trading intraday, you're gonna have multiple opportunities. You're gonna have opportunities every day. Whereas with swing trading, you can really, kind of some days like nothing is happening. Like today is a great day. A lot of things are moving. A lot of trades have moved. But while things are kind of in between moves, a lot of times you're just sitting on your hands doing nothing. So if you're someone that kind of likes this, like being very active, like you got to have a trade every day. Maybe you want to consider day trading. But having been through both sides, like I really enjoy kind of the calm and cool side of swing trading. That I find that quite enjoyable. After I gave it a real chance, because before that I've only ever been on and off. When the crypto market's moving, then I swing trade the cryptos, and it's like long only. It's not really a day-to-day everyday thing. It's kind of like, oh, market's moving, let's look for some longs. I've really enjoyed it. Do you ever think about moving over to swing trading, or is day trading kind of your thing at the moment? Do you ever see yourself switching?
I would say what I do enjoy. I do enjoy swing trading stocks from a long-term perspective. So that's something that in my long-term stock portfolio, I do that, and I am finding some success this year. I think this year I'm up about 25% on the and I only really started doing it maybe in June, maybe May, right? Just after the wedding.
So 25% in less than half a year. So when does the hedge fund open?
Yeah, so I'm enjoying it, bro. Yes, it's obviously going to be a little bit more. I was buying NVIDIA. Our hedge funds aren't just buying NVIDIA by itself, right? But Yeah, so I'm enjoying it. I think that the stocks are quite nice. I think crypto and stocks are quite nice to swing trade. Obviously because they trend a lot better. Compared to I think currencies can sometimes be quite. I mean, obviously you're going to have trends in the market, but they're going to move a lot slower than an index, obviously, or an individual stock. So, we'll see. I do enjoy my day trading for now. I think for now, I'm just locked in on really trading mostly the Nasdaq on an intraday perspective, and the DAX and the London session. But London session,
Are those the pairs that, like, why did you end up selecting those pairs? Is it kind of like by data, like those have been the best performers for you this year? How did you end up, like deciding, hey, these are the pairs I focus on day trading? Because I know you were doing some currency stuff before, and this could be something very helpful to the listeners and the users, because market selection, similarly in poker, like table selection is very important, right? Like selecting the right markets for you to trade, for your system, for your tendencies is is a big part of the game.
Yeah. So, I mean, I basically when I made the move over from currencies, you guys know that I've been trading currencies for like the last 5 years. And then I was just like, you know what? I want to trade New York session. I'm tired of waking up at 7 o'clock in the morning to trade at 8 o'clock South African time, and then I'm literally on the desk from 8 until 5, and then have calls in the evening, and then I'm doing it all over again. I mean, it's what you get into trading because you want to have like a little bit more time freedom. And I was like, listen, I'm getting burnt out here, and I was on a drawdown run, so it was like just a
that compounds things, makes it worse.
Yeah, compounds things. So I was like, you know what, stuff it. Let me just chill in the mornings, work on my brand in the mornings. I can do my content stuff, live streams, that type of stuff, daily reviews in the mornings, and just have like a little bit of and gym, and have a bit more of a chilled morning. And then afternoons into evenings, I can be trading the indexes. So I started to trade all of the indexes. I started, this was 3 months ago, trading the NASDAQ, S&P, Dow, and DAX. And then just looking at my stats. So looking at my stats, I've kind of been like, NASDAQ is my better performer. I think 90% of my, profits are coming from the NASDAQ. And then just seeing how that, looking at my reports, and I do use TradeZella for those reports, the journal, right? So yeah, that's kind of how I looked at it.
So I know that you're very data driven in your decisions. That's why I asked that, right? Like I am the same way, and I think that any good trader I know tends to be very driven and motivated by data, because for me it's I don't know how it's possible for you to ascertain that you have edge without data. Like, how do you know if you're not tracking everything that you're doing? If you haven't collected data, let's say over back testing, forward testing, or live trading, whatever it is, however you want to collect data. I don't know how you're able to ascertain that you have edge. How do you have the confidence? Because everyone's going to go through drawdown periods, and it can be very easy for you to kind of stray from the path, if you will, during drawdown periods, and start to doubt your system, your edge, when really you should just continue executing.
Agreed. Yeah, so here's some of my stats. I mean, I've actually just pulled them up for you. So this is from when I first moved over to the indexes on the 1st of July until today, 26th of September. As you can see, this month I'm up a whopping actually $477 this month.
Amazing. So, incredible.
But averaging 14 grand, just under 15 grand a month. So the thing is, look, as you can see, so the thing I like about TradeZilla, it gives you all the data, right? And if you get your average winning time, losing time, everything like this. This is the overview. You can go into each and every single individual one here. But just look over here, my top 10 symbols, US Tech. I'm 31,000. So most of my profits are coming from trading the NASDAQ, right? US Tech, NASDAQ. And then Tesla, I trade Tesla on my personal account and with FTMO. That I'm up 7 grand. So, and then the Dow's next, and then the S&P. So NASDAQ is obviously majority
that's disproportionately large winner for you.
Yep. So everything else is under 10 grand. This one's over 30. So most of the money is coming from the NASDAQ. So you had that, my biggest losing day actually yesterday in the last 3 months was yesterday. I was just being an idiot. So
what would you say caused your biggest losing day? Because I mean, looking at that chart, you have very few losing days, actually. You have disproportionately large numbers of winning days, or even slightly break even, but your losing days don't tend to be a lot. So is there anything that you felt like you could have done better on, your biggest losing day?
Yeah, bro, I can be stubborn sometimes. I try and keep jabbing when I know that, listen, I'm on the wrong side of the market, or I just need to take a step back. And that is, I'm not perfect by any means. But by a long shot. So, I just kept on stabbing. And then eventually I was like, you know what, I'm done, hit my max. I'm done for the day. Let me get off the desk. And obviously it's always easier in hindsight, right? But I think looking at these stats on a weekly basis, I think I always try and see, and this clearly shows that I should be focusing completely on yesterday I was trading the S&P. I wasn't trading NASDAQ. So this shows me that I should be focused. I missed also what pissed me off was on the open, I had a clean trade for me on the NASDAQ, right on the open. I should have been in long. We got a nice, move higher. I would have been one and done for the day, maybe up a couple of grand on and then I would have been done. But unfortunately, I missed it because I was stuffing around trying to look at the S&P, and then you know how it goes. It's like, one goes to the next, and that's unfortunately how
like, were you on the charts when that trade presented itself? So you saw the trade and you didn't take it, and you went to look around somewhere else, shop around, and then it ended up running.
Correct. Yep. And then I just kept.
Yeah. I mean, you hesitate, you masturbate, bro.
Yeah. Yeah. Yep. I was clowning around, bro. I missed my trade, and then I go and shop around, and as you said, yeah. No, it's but this just shows me. Even looking at this again, I was looking at this yesterday. Just this shows me from the 1st of July till today. So July, August, or whole of July, August, and a bit of 3 months. Most of my money is coming on the NASDAQ, and I should be probably sticking to them. I wonder. I was still having one or two the Euro CAD, whopping $166. But that's when I just made the move over at the beginning of July through to the indexes. So that's been my stats. So I think just having a look at that, right, is definitely important. Knowing where you are, what you're trading best, what you're trading your worst. You need to know that.
Yeah, I mean, I think that, like, if you are a stats and numbers guy, if you really are able to dig in, you can find your edge through data and numbers. That's what I've done. I put a disproportionately large amount of time into backtesting and data collection, and every time something didn't work out, every time, like, I would lose confidence or whatever, some trading, like, whatever I'm doing isn't working, I go back. I collect more data and I build that up. I'm like, oh, okay, cool. If we tweak this, maybe if we adjust the way that we move the stop loss, like, that's how I've ended up with the rule set that I'm currently trading. It's through like multiple iterations, backtesting, forward testing, live trading of different strategies that has amalgamated into like this set of rules that I follow, right? Like, and that edge it really wasn't like overnight thing. It was like the process of getting to being consistently profitable really was like, I would go through a stretch of profitable and then dump it all back, right? Like, and you think you're the shit, you dump it all back, and then you're like, well, why didn't that work? And then you start to go into fixing, and you go into version 1, version 1.2, 1.3, version 2, version 2.3 of yourself as a trader, and then you find that to be a process of getting there. It's not really like a light bulb of like, yesterday I wasn't profitable, today I found this insanely good strategy and now I'm making million, right? Which I think can kind of be what's sold a lot in the trading industry, which is like, if you learn my method, if you come here, like next month, like, you're gonna make the same amount of money that I do. Well, listen, it's not going to happen. That's a pipe dream. So yeah, I like, even as you can see today from this conversation we're having, it's like James is still very focused on day trading, and he's focused on the indices at the moment, right? Like, in the Nas is his top performer. There's a lot of different ways that you can dig into data, collect data, and start to break it down for you to figure out where your edge is at.
Yeah, and I think also something that I had a look at my stats. So something that was happening in my own trading as well was my personal accounts were doing really well, but some of my funded accounts were ending like break even or down some days. So the reason being, I think trading personal capital and prop firms is very different, right? And sometimes I do really well on my personal, but on the prop firms, I'm taking too much size. So let me explain what was happening. I would take a trade on my personal account and I would be up. Let's say the first trade was a loss and I would lose 1%. I would then stop copying to my funded accounts and everything like that on prop firm accounts, and I would only trade my personal for the rest of the day. Second and third trade will be winners. I'll end up on the day, but guess what? The prop firm accounts are still down. So that was happening to me, and I had to kind of step in and be like, listen, if I'm going to trade, I need to just tone down the risk on the prop firm. So yeah, just knowing where your stats are for each account as well is.
I heard something very interesting. I don't remember where I saw this or heard this from. Maybe it's from a podcast or something. And I would love your take on this, right? Like for the prop firm side. And maybe you've heard this before. So there's traders out there that, if they're looking to acquire funding as fast as possible, and these are profitable traders, they know their edge. And then, so what they've said is you can play a game within a game of the prop firm side, which is, let's say you're aiming to get funded for, I don't know, $200,000. Let's just say that's your goal, right? And you could buy a $200,000 account, but instead of buying a $200,000 account, you should set aside the budget to play multiple $50,000 accounts and then risk big on those $50,000 accounts, because you don't really want to waste time trading during the evaluation phase, right? Like, so if anything, figure out what the rules are, what your daily max loss is, make sure you don't breach it. Maybe you're risking like 2%, right? Or even 3%. And you could pass this, you could either fail it very quickly or pass it very quickly, and then you start to risk down and you adjust and you trade the funded account how you normally would, because essentially what you're doing during the challenge phase is you're trading for nothing. So you're spending a lot of time doing nothing, essentially, from a P&L perspective of real gains. Right? So what do you think about like this approach, which is like, okay, risking, like buying smaller accounts but risking up, and being okay with like taking 3 or 4 tries, because that within 3 or 4 tries, even if it could take you a week or two for 3 or 4 tries on 3 or 4 different accounts, you're probably going to get funded for at least 1 or 2 of the accounts, right? If you kind of get that right and just get 2 or 3 trades moving in your favor, as opposed to like risking very small, grinding it out, maybe taking 2, 3, 4 months to maybe pass a challenge, and then you got to do a phase 2 or something like that.
Yeah, I do that on some accounts. Some accounts I'm like, you know what, I'm going to trade this account exclusively, and I'm going to risk more. 100%. I think it just depends. I treat my funded accounts very, very conservative. I trade very small on them, if they, and I just look for like 2-3% gains on them a month, because I'm taking up, I'm going to make money from them. You're trading for money, right? Whereas that I would, if you, let's say, as you said, if you want to get funded with 200 grand, take 450Ks and then look to pass them within 2 weeks max. You give yourself a max. I'm either going to fail this account or blow this account, or pass this account in 2 weeks. I do that sometimes, and you got to be okay. But then you got to be okay with losing some accounts pretty quickly too. Which, if you have the budget to do it, if you set aside a budget every single month, and you're like, you know what, once you get funded, you're going to make back the 3 accounts that you failed to get it passed. Then yes, I do that with some accounts, 100%. So I think it just depends on how you want to go. Some accounts, I'm like, you know what, let me treat this slow and steady. Other accounts, I'm like, you know what, I'm going to attack this. And I'm like, you know what, if I fail it, I'll buy another one next month.
Yeah. I mean, I heard, I don't remember where I heard this from, but I just thought actually that's pretty smart. Like, it's pretty cool, because if you really think about it from a time perspective, if your goal is to accumulate as much capital as possible, and you know that you are profitable, right? Like if you're not profitable, or you have no idea, this is a good way to light money on fire, or just like be straight up gambling. Hey, if you want to do that, like, I'm not stopping you. You can buy accounts at hydrafunding.io.
Flip a coin and go long or short.
Exactly. And, but if you are profitable, like, and you are looking to, if you are in a scaling phase, I would say, like, that's probably it. Like, if you're looking to scale, right? If you're beyond that first stage of like, cool, like, I'm consistently profitable, I'm very happy with where my trading is at, I am looking to increase my AUM as much as I possibly can in, let's say, the next 6 months, right? Like, if that's your kind of goal, if maybe your goal should be like, hey, I've withdrawn some profits from my personal account. I withdrew about 10K, and I want to reinvest this into my own trading and leverage additional capital, right? Like, because that 10K of profits, it's not a lot. You're not going to be able to do much with just 10K of profits. But if you then took that and leveraged prop firm capital with that, maybe you'd be looking at an investment of 10K. You look at how you want to allocate it, maybe just a bunch of like 50K challenges, and you say, hey, I'm going to take as many shots as I can and try to pass as quickly as possible. You might be able to leverage that 10K into $100,000 of funded capital, right? Like it's very possible. Like 100,000 is relatively conservative. If you have $10,000, you're a profitable trader, you want to spend it on funded accounts, you could be looking at $500,000 in funded capital. If you have a good run, if you have a good stretch, then all of a sudden maybe you're looking at managing $500,000 with $10,000 of money from your own personal trading. And I'm pretty sure your personal trading account's not $500,000. Yeah. There's very few people in the world with $500,000 personal trading accounts, right? So that's just an interesting way of looking at it. Like I feel like almost now there's like different phases as a trader, right? Like you start off in this, like, you don't know what's going on, like you're trying to figure things out, like, and then you get into a phase where maybe you're starting to break even, start to have some profitable months, start to find consistency. And then when you finally get into this consistency phase, which I feel like has been the last like year and a half of my own trading, has been like making sure that the highs, and the lows aren't like, just making sure trying to bring that volatility down a little bit has been really like the focus for me, especially I think the last year. And, I've been making a lot of good progress on it, and I feel like, potentially for me, the next year, like 2025 could be about scaling, and that could, for me, mentally makes a lot of sense of like, set aside 10 grand and then how much funded capital can I accumulate using this 10 grand and how quickly can I do it? Because I don't want to spend all 10 grand at once, buy $1 million challenge, which I could, and then trade that thing religiously, spend 4 months passing it. Yeah. The other way sounds like potentially could be better, and just being okay with having the variance of losing some challenges. If I, buy 10 and I pass 5, hey, I'm good with that, right? Like if I buy 10 50K accounts and I end up with $250,000 funded, I don't think that's a bad result at all.
Not at all. No. Yeah.
Yeah, there's a lot of ways to play the game. There's a lot of different ways to play the game.
Definitely. There's a lot of ways to play the game. And I think you just got to find what works for you. Now that you mentioned, it's like you can go slow instead. If you have 10 grand, if you set aside 10 grand, there's no point in trying to put it all into one account. It's probably wise to go, okay, let me split it up into multiple 100K accounts or multiple 50K accounts, whatever it is.
Yeah, that's what I would advise. Like, I would not recommend someone go all, like, if let's say someone had 10K they set aside to, whether it's get started trading or, they're in whatever place you're at, like where you're, maybe you're somewhat profitable and you're looking to scale into prop firm accounts. The last thing you'd want to do is blow it all on one challenge, right? Like you want to kind of start small. Start with the 50Ks, the 100Ks, and be okay with losing it. Like I feel like that's probably like a healthy mentality to have, which is like, I'm going to try and pass this within reason, right? Like I don't want to trade this account forever. Yeah. Knowing that you have multiple shots behind you is also going to improve your psychology when it comes to trading. And I think that's one of the benefits of like trading with prop firms is you no longer have to deposit your 10K into a broker and just hope for the best, right? Like it's like, I could split this up into 20 shots at a 50K account. All of a sudden, you're probably not going to blow 20 accounts in a row. Like it's actually very hard. You're going to get, you're probably going to be 3 or 4 in, you're going to pass one. Maybe you make a payout, right? Like it's a much smarter way to kind of get into the game. That's why I love prop firms. That's why we started Hydra in the first place, because I saw this industry and I was like, shit, this is actually one of those few scenarios in trading in the industry where there's a real win-win opportunity for traders as well as company owners if the firm is run the right way.
Correct. If the firm's run correctly, and I agree, bro. I've actually tweeted it the other day. I think prop firms are the best thing to happen to the retail trading space. That's why I vouch for great firms such as, Hydra, because what you guys are doing, you guys are giving, especially, traders that don't have, very few people have $100,000 to put into a brokerage firm, because there's no point in trading, in my opinion, trying to take your $5,000 even. If you don't have at least $10,000 to put into a brokerage firm, I would, my personal thing is actually 50. But if you're not going to make a living off $10,000 in a brokerage, you're just not going to. Right?
Honestly, even 50, it's like, You know,
push. Yep.
you're kind of pushing it if you want to trade full time, right? But like I said, the question is, like you said, how many people have 100K just lying around that they're willing to lose, that they're willing to blow on trading? Like it's not happening.
It's not
right?
feasible.
You know, I think that, you know, I personally like am so happy that I, you know, kind of got into trading at a time where there is prop funding. You know, there is, because I think if there wasn't, you know, really looking for external private investor capital is really the best way to go. This whole idea of like putting $10,000 in and flipping it into $1 million is just, you know, you can do what you want, but I wouldn't recommend trying that. You know, like it's a lot more likely that you're going to blow the account than you actually flip it 10x, 20x. It's very, very unlikely for that to happen. But yeah, I personally am very focused right now on passing this 200K challenge. I have never traded a 200K real account in my life. Like I can be very honest about it. That would be the largest live capital that
That's brilliant.
I've ever traded in my life. So that would be something really, really cool. You know, like that would be something really, really awesome. I would really relish that.
You've never traded 200K in your life. Now all of a sudden you're going to have a 200 grand live capital, you know, to trade and make real money from. That's super cool, bro. I'm excited for you to get a pass.
Yeah, so there's going to be we're going to wrap up today's podcast because I know you got to go in a second, James. But you're on a couple of challenges. I'm on a challenge. So there's the no hair gang versus the long hair gang. Who's gonna get their funded accounts first? Last episode, James said no hair. What was he said? We're talking about somebody else. And he's like, oh, he's bald too, so he must be a good trader. So long hair gang over here, okay? Long hair gang versus no hair gang. Who's gonna get their funded account first?
Yeah, no, this is I love it. Also, I will plug. So make sure to follow me and DY both on Twitter. I am going to be doing live daily reviews of my days. I started to record them and showing my Hydra accounts. So make sure to check me out there.
We'll have all the socials in the link. In the links in the description. Follow James, follow myself on Twitter, Instagram. You know, I know James does a lot of great content. You're still doing like live streams even on Twitter as well, right?
Yes, that's
right. So James puts out a bunch of great content. You know, and I can vouch for him and the guys over at ASFX. I think they have one of the best communities out there. One of the very few in the industry that are keeping it real with you all the time. That's one of the reasons why we're working together, because I love what they stand for and I love what they're doing. So give them a follow, give me a follow, links in the description, and appreciate you guys for being here for episode 2. Hope this was fun. It was definitely fun hanging out with James, and we'll see you guys in episode 3.